Let's start off with the fact that the NSE 20 came under pressure again on Friday. A marginal loss. I mean, we're down 0.2%, but we've seen a few losses coming through over the last few days. No surprise there, given that we've seen incredible gains over the last while.
Absolutely. It's a story that's being replayed across all the African markets as far as I can see, and Kenya is no different. The NSE 20 had topped 30% in 2010. It's up about 27%, taking into account Friday's activity. The all share hit a new high, up about 23%. So I remain bullish. I think we're in a bull channel. It's behaving extremely well. And I think there's plenty of value in the stock exchange right now. Confidence levels continue to rise. I think GDP will surprise to the upside. The farmers are having an absolute field day, and this is a story which is playing across Africa, of course, because it's reducing inflation rates and it's brought interest rates down to rates we haven't seen across our continent for some time.
Well, you're talking about plenty of value being found at this stage. Ali, give us some insights into that. I mean, you also mentioned the inflation rate slowing to 3.7% from 4%. We know that banks are currently trying to lower their interest rates, so a bullish scenario all round.
Absolutely. I mean, the banks, for now, it's a little bit scrappy. It's a little bit individualistic. Citibank are at 10% on the lending rate. The likes of Diamond Trust are at 14.25. That's a 425 basis point difference between two banks. But, you know, the trend is your friend, and the trend is interest rates are going down substantially. And we're going to see a substantial fillip, I think, up in asset prices once that starts to feed through to retail, who still are bearing some quite high interest rate charges. Looking at the market as a whole, you know, we were coming out of a fat tail in 2008, 2009. The prices still remain undervalued, and I think we're in one of these sweet spots where really they behave so well, these stock exchanges. They look very bullish on the charts as well.
Okay, so what would you be accumulating right now, Ali? Is it about the banking sector? Is it about looking at the resource companies? Where would you be finding value right now? Because it seems that, unlike most equity markets, we've got a lot of choice when it comes to Kenya.
That's right. I mean, we've got about 53 counters. The banks, obviously, because of the capitalization numbers, have an outsized influence on the stock exchange. I would look at the big cap banks. I think they've had an absolute field day in the bond market. Large mark-to-market gains which are going to feed through in this first quarter. Equity Bank showed a stupendous acceleration of over 40% first quarter 2010. And whilst I don't expect similar magnitude numbers, but I expect good numbers across the big five banks. I also like the agricultural sector. I think agriculture is in a multi-year sweet spot, particularly the tea farmers, who have never produced so much and been able to sell so much at such high prices. Last week we had the biggest auction we've ever had in Mombasa, and prices rose. So you've really got bullish conditions there as well. And then in the industrial sector, you know, you saw those results come out of Crown Berger. There's a lot of value in little pockets all across the board, I think.
Ali, also a lot of news out in terms of mergers, acquisitions and so forth.
Yes.
Let's start off with housing finance, a company that's been soaring over the last while, and on Friday we saw it gaining over 5%. Of course, a lot of talk about whether there's going to be some kind of hostile takeover by Equity Bank. How likely is that?
Well, first of all, it would be something new. You know, the bourse here in terms of M&A activity has been a rather sleepy Rumpelstiltskin corner. I welcome James Mwangi's words. He's obviously the predator, and housing finance is the prey. And I think the question now is, at what premium will he take out shares in housing finance in order to get from where he is just below 25% into a majority position? He's shaking up the banking sector. He's shaking up corporate Kenya, and I think all power to his elbow. I think it's a very positive move. And I expect housing finance still to have some room to appreciate. Equity Bank is, there was a knee-jerk sell-off as all this stuff came out about housing finance. But Equity Bank too is a growth bank priced at zero growth practically at the moment, it seems to me.
Well, Ali, you know, would you be buying these stocks at this stage on the back of these rumors, and of course the fact that many are expecting something to be concluded relatively soon? I mean, what does it mean for investors right now?
Well, investors clearly have been chasing housing finance. They've chased it from about 15 shillings. I think last I saw we're at 23. That's nearly a 50% gain. I, for one, don't like to trade on these sort of high beta type transactions. I would not be chasing housing finance at this sort of price, but I can see it going higher. I would prefer to look at equity and take a one-year horizon. I think earnings have inflected. I think people have got a price growth back into that stock price. And I think, therefore, that looks to me a better risk-adjusted trade for now. But I would take James Wang at his word. I think he's going to bite off housing finance at some point in the near future.
All right, media, advertising, lots of interesting things happening there as well. ScanGroup in negotiations that could see it gain a significant stake in its rival Ogilvy East Africa. What are you hearing?
Well, I think it's a done deal. I'm due to go to lunch. They're making a presentation today, so I look forward to going to that. I think ScanGroup is WPP Mark II. It's absolutely the same Martin Sorrell game plan. Sorrell even has 27% in ScanGroup. If you know what WPP did, you know what ScanGroup's doing. They've got a currency via their listing, and they're using that currency to increase their footprint across the continent. I think this is a good transaction from ScanGroup. They've been looking to unlock the continent outside the East African region, and this is, it seems to me, a good fit and a way of moving further afield across the continent, where I believe the advertising spend is going to be in a steep uptrend, because I'm seeing a lot more international interest, a lot more brands looking to make sure their brands are imprinted on the African mind.
What about the regulatory approval regarding ScanGroup and Ogilvy East Africa? Because there are a lot of concerns that we could see some kind of monopoly if we do see the two companies, create great synergies in that region.
It's an interesting question, and again, it's the WPP model, where Bharat has got all these different advertising companies, which, if you added them all together, would surely have a pretty much monopolistic and dominant position. But because he's given the management a great deal of management freedom, I think he's going to be able to argue the point that he's not a threat to the industry, and that actually he might be running a lot of businesses within it, but they're all fragmented. And I think that's the argument which he will use and which he will win, actually.
Turning our attention now to Telkom Kenya, and it seems that this company is in a bit of a dispute with government at this stage, something about overpaying of assets. Could you give us some insights into that, and also the way that investors are taking this news?
Well, I think they've been saying for a long time that they overpaid at the initial purchase when they bought 51% of the shares in the Telkom Kenya business. They said a lot of the assets which were meant to have been transferred did not exist or were not transferred, and basically they've been very unhappy for some time. I think part of the reason that they are so unhappy is simply because they have not been able to take a bite out of Safaricom or make a substantial move in the telecom market. They've done well enough, but I don't think they've done extraordinarily well or as per their business plan. So I think, they're a little bit of sour grapes. They're trying to work out how to make this business work better than it is. I think they've got a good business there, but they've definitely suffered from a very dominant market player in Safaricom.
Take a big bite out of Safaricom. I think that's what most telecom companies in that region would like to do, and I think it's going to be quite a tough thing for most companies, Ali. But we know, 4G, a new thing that Safaricom is going to be embarking on. We also know that penetration in Kenya is currently only sitting at 50%. So there's lots of room for growth, and the question is, who's going to take the biggest market share?
Well, I think, Safaricom remains a dominant player. I'm uncertain how Bharti is going to compete with them. I think Bharti will probably go for the more low-hanging fruit in other parts of this continent than take Safaricom head-on. You will recall the last time Zain took Safaricom head-on in a very irrational state of competition. It was a very, very expensive lesson that they got taught. So I think Bharti, given what's going on, my impression is Bharti will be a much stronger competitor, but I don't think they're going to do anything irrational or crimp Safaricom in the near term. Safaricom, of course, are going to be delivering their results at the end of May, and I'm expecting some very, very strong results, probably plus 40%. Big growth in data, big growth in money, mobile wallet money transfer, and I think you'll see a strong price into May, which will further support our stock exchange over the next 4 weeks.